Hi guys, welcome to another video from Little Too Simple. A lot of people by default consider debt as some kind of monster that is out there to destroy them. This perception about debt mostly comes from the credit card debt trap that many credit card users find themselves in at some point in their financial journey. Even we agree that credit card debt is worse than a monster. But believe us when we say that not all debt is bad. There is something called good debt. As a matter of fact, most billionaires in today's world have hundreds of millions or even billions of dollars in good debt. At this point, you might be wondering, what exactly is good debt? Well, that's the exact question we're going to answer in this video. But before we get started, a quick disclaimer. This video is made entirely for educational and entertainment purposes. It should not be considered as financial advice of any kind. And if you like these kinds of videos, don't forget to like this video, subscribe to our channel, and share it with your friends and family. Now, let's roll. Good debt is any situation where you take on debt to make an investment, and that investment gives you returns greater than the rate of interest you pay for that debt. If you're wondering whether good debt is even possible for everyday people like you and me, yes, it is. Let's look at the best types of good debt that are accessible to everyone. Unknowingly, many of you may already have taken good debt in the form of a housing mortgage. After holding flat for most of the 20th century, housing prices began a steady climb in 1968 until the mid-1990s. They kept rising and eventually peaked in November 2006. Yes, the real estate bubble burst in 2008 and temporarily made everyone reconsider whether home ownership could really be a storehouse of wealth. But if you look at what's happened since the bleak bottom of the Great Recession in 2010, housing has bounced back big time. In 2020 alone, during the coronavirus pandemic, home prices surged more than 10%. No matter which way you look at it, when observed over a decade or more, the appreciation in home prices is always greater than the interest paid for the mortgage. This makes mortgage the king of good debt. Home equity is the portion of your home loan that you've already paid off. It's the difference between what your home is worth and how much you still owe on your mortgage. As your home's value increases over the long term and you pay down the principal, your equity grows. You can tap into this equity through a home equity loan or line of credit, HELOC. These are essentially cousins of mortgages. Borrowers can secure a loan at comparatively low interest rates using their equity. When used for the right purposes, a home equity loan can be a great example of good debt. We've even made an entire video on home equity and how one can use it wisely to generate wealth. You can check it out by clicking the link on the top right corner of your screen. Most rich people will tell you that the fastest way to become wealthy is to start your own business. But despite being capable and talented, many people can't start a business due to the lack of initial capital. This is where a business loan can help. Whether it's opening a franchise or building your own company from scratch, a business loan can give you access to a large amount of money at once. Yes, almost 1/3 of businesses fail within the first 2 years. But if you have enough ambition, savviness, and a bit of luck, borrowing money to start your own business could be the best investment you'll ever make. That's why we consider a business loan as good debt, though we understand it's somewhat debatable. Student loans can also be good debt, if used wisely. They are worth it if you're borrowing to pay for education that leads to a well-paying career. Degrees in STEM fields, science, technology, engineering, and mathematics, typically have high earning potential. On the flip side, if you take on a huge student loan to major in liberal arts, photography, philosophy, or human development, you might struggle to pay it off. Your friends may encourage you to follow your dreams, but your financial advisor probably won't. So, when used correctly, a student loan can be good debt, but only when it funds the right kind of degree. We hope this video helped you understand how debt can actually be good for you, provided you know how to differentiate between good debt and bad debt, and use good debt wisely. Thanks for sticking with us until the end. Please let us know your thoughts in the comments below. If you found this video interesting, don't forget to like, share, and subscribe to our channel for more videos like this one. Until next time, have a good one, guys.